Good morning. Today is February 13th. It's Tuesday, and we're so excited that you're here for Coffee with Amy and Kevin. I'm flying solo today. Amy's not here, but I do have a special guest I'll introduce in just a moment. Just make sure you have your hot coffee, your hot tea, your smoothie, as Amy says, or anything else you need. And we're going to get this episode of Coffee with Amy and Kevin started. So I mentioned a special guest. I'd love to introduce to you Jeremy Collett. He is the EVP and the head of capital markets at Guaranteed Rate. Good morning, Jeremy.
Yeah, hey, good morning, Kevin.
Thanks so much for joining. I'd love to kick this off. If you could just tell us a little bit about what you do at Guaranteed Rate and what that role as head of capital markets looks like.
Yeah, sure, I'd love to. So, like you mentioned, I'm the head of capital markets, and capital markets has really become sort of this, kind of buzzword title for kind of traditional secondary market, secondary marketing activities in the mortgage market. I think the difference is, particularly at the larger lenders, um, the capital markets role has really taken on a form, in the structured finance and the securitization of loans and capital raising and all these sophisticated kind of, structured finance tools that companies really have to do, use and take advantage of to compete in this marketplace. Because, as you know, just the real estate business in general, whether you're talking finance or sales, is super competitive. So you need to take advantage of every tool that's possible out there, and that includes the use of technology to make transactions cheaper and more efficient, and creating a better mousetrap for customers to work through you. We do all that stuff at Guaranteed Rate. We've got a great team, a whole team dedicated to just trading and hedging. We also, and this is sort of new to our particular team, but we took over product development about a year ago. And I got to tell you, like the whole game has changed in terms of products, and I'll talk a lot about that. But this post kind of pandemic environment we're in, you really got to know your products, and I mean whether you're a realtor, whether you're a loan officer, obviously an underwriter. But as I got ready to join you today, and I listened to some of our top originators talk about what they're doing to be successful today, and what our realtor referral partners are doing to be successful today. There's not a whole lot of difference between what everybody's doing and what we're doing, as a mortgage trader. It's a lot of back to kind of old school, growing your business when you first started out, and just hustling. But you really got to be working with, someone that you trust, a partner, because with higher rates and low inventory, affordability is the main problem that we're all suffering, with. But you got to have people on your team and in your corner that have solutions to that.
Yes. Before we get to 2024 and your outlook there, you bring up a really good point, which is, as an agent, having the right partner in place. With Guaranteed Rate, and of course, a lot of people watching are with Proper Rate. They have loan officers at Proper Rate as well. And so with that, making sure they have somebody who is knowledgeable and able to service clients, because it's a reflection back on the agent, anybody that they introduce into the process to get their clients to where they want to go.
100%. Yeah. And you want to be well represented, but you also got to dig deep into your tool bag right now to figure out ways to get these deals done. And we've launched thousands of down payment assistance programs throughout the country, some local, some regional, some nationwide even now. We have all kinds of buy down options, whether they're temporary buy downs or permanent buy downs. And one of the reasons the home builders are so successful right now is because that's exactly what they're doing. They're using points to buy down the interest rate to open up the universe of potential borrowers and improve affordability. And that's why home builders are doing good. We've specifically spent the last 12 months trying to replicate those tools for our LOs to be able to offer to realtors. So folks trying to sell their home can basically compete with the builders on opening up affordability.
Super interesting. I think
Yeah.
let's go to 2024 now, because the number one question that agents get asked universally is how's the market, or what's happening in the market, or what do you think will happen in the market? So coming from you, who watches all of these things, has a really high level view, what is your outlook for 24?
Yeah, it's crazy how the outlook, and not just mine, but the outlook of the market, it changes from week to week, maybe even from day to day, depending on what happens. Like, last week was kind of a very pivotal week for the bond market. You had Jerome Powell come out Wednesday, with the Fed announcement. Of course, they didn't cut, and they really kind of dampened the expectations for a rate cut in March. Just saying, hey, the economy's doing really strong. The consumer's super healthy. Inflation's coming down, but we might want to take a little more time to take a better look at that. And so that was kind of a gut punch to the bulls in the bond market. Expecting rates to really come down in a meaningful way this year. And then of course Friday's employment number. Non-farm payrolls, 383,000, I think was the number, or somewhere similar to that. Job growth's extraordinary right now. And rates really, took a leap higher on Friday, and that carried over into Monday. My expectation this year is the Fed probably gets their first cut in June. The second half of the year, we'll see a few more cuts, maybe 3 to 4 cuts. I think the forward guidance right now is pricing in about 115 basis points of lower rates. And people ask me all the time, well, that's great. Like, if we're expecting rates to come down, that means mortgage rates are going to come down kind of tick for tack as the Fed cuts. And that's just not how it works. What happens is we're trading based off of forward expectations of interest rates. So we already, the market is assuming, all the futures markets are predicting and trading like the Fed's going to cut 150 basis or 115 basis points ish starting sometime early summer. And mortgage rates, for the most part, have already made that change, right? Like you roll back to October, when the higher for longer narrative came out, and mortgage rates were near 8%, right? Fast forward to January, most of our production's in kind of the low to mid sixes, around there. So that's a meaningful drop in mortgage rates already. So my gut feeling is that we're kind of in the range where mortgage rates are going to be throughout the rest of the year. You know what I mean? Like kind of the 6 to 7 range. I know a lot of people are hoping for fives. It could happen, but I think we're there. I think this is the market we're going to have to learn to work within.
Okay, and that aligns with what a lot of agents and a lot of you watching are telling your clients and consumers, which is, don't expect to see a 3 ever potentially during our lifetimes. But, the longer we sit and wait, you talk about affordability, potentially the longer we sit and wait, given the inventory situation, the less affordable it's going to come if we wait for interest rates to get back down to where they were. I think I've got a couple of questions, just fast ones, before we wrap, because we do have to wrap in just a moment. But speed round, I guess. Number one, the election is coming this year. What impact do you see happening there?
Yeah, look, I mean, just based off the primaries, I think you gotta seriously consider a Trump 2.0, presidency. And, for picking winners and losers in the financial markets based off elections is really difficult. Just go back and look at like what's happened to like green energy stocks, right? They've gotten absolutely annihilated during the Biden presidency, which is counterintuitive to like a Democrat agenda compared to the Trump administration's agenda. On the other hand, traditional like crude oil based stocks are up 53% over Biden's presidency. So I got to caution people against, trying to pick winners and losers based off of politics. It just doesn't have a very good track record.
Got it. So to summarize, because and for everyone watching, of course, we've gotten really deep, right? There's a lot of detail here. The reason why we're sharing this is we want to elevate you so that you can share intelligent viewpoints, intelligent, predictions and forecasts, rather than just a general statement about it's doing great or the market is good or we're watching it closely. Something very specific, because that's going to allow you to become a true advisor in their eyes. So Jeremy, with all of the information that you have, with what you've shared today, what can agents, when they're asked that question about what's going to happen in 2024 in a 1, 2, 3 sentence answer, what would they answer with?
Yeah, look, I think right now you've got a window in 2024 where we do have certain programs rolled out. So all that stuff, temporary buy downs, permanent buy downs, using a lot of the AMI tools. You got to be working with a mortgage partner that understands all that stuff because there's just a ton of options open up for first-time home buyers right now, and there's really no guarantee that that sector of the market is going to have the same access to these programs under a new administration. So the time for hammering that home is right now, because that could change. The focus is going to be more on profitability and risk management and stuff like that.
That's really helpful, Jeremy. Thank you.
Yeah.
You know what? I receive your newsletters now daily. And so I have a lot to learn for everyone that's watching. There's a lot of, like we talked about, there's a lot of detail here, but it's super interesting to see all the levers and how it really impacts what we see as agents. So I really appreciate you sharing with us today.
Yeah, look, next time maybe we just need to take 1 or 2 questions, and I feel like I could talk forever about this stuff. Love my job, love working with you guys, love collaborating with our loan officers about where the market's going and what they need from the capital markets to win more deals and put more people in houses. So yeah, anytime you guys want to do this, just let me know.
I love it. I know I could spend all afternoon. Maybe we grab lunch, a drink, coffee, whatever. I appreciate it.
Yeah, great.
Cool.
Yeah, cool. Thanks, Kevin.
All right, thanks, Jeremy. And for everyone watching, thanks so much for joining us. We'll see you next Tuesday. And be sure to share in the comments any questions, thoughts on what you feel you took away from today in our conversation with Jeremy. Until we see you next Tuesday, you got this. And thank you, Jeremy.
Yep, thanks. Have a good weekend.